Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I'm going to talk about Star Startup Scheme, funding support to eligible startups recognized as per government policy, the product offered by Bank of India. Introduction. Startups play a crucial role in driving innovation, creating employment, and contributing to economic growth. Recognizing the challenges faced by new and emerging businesses, banks and financial institutions offer specialized financing solutions designed to support startups at various stages of their growth. These schemes aim to provide easy access to capital, encourage innovation, and foster scalable business models with high potential for wealth creation. By offering a combination of fund based and non fund based facilities, flexible repayment options, and government backed guarantee support, these initiatives enable startups to focus on developing their products, processes, and services while ensuring sustainable growth and operational stability. Definition. A startup is an entity that is officially incorporated in India as a private limited company under the Companies Act 2013, a registered partnership firm under the Indian Partnership Act 1932, or a limited liability partnership LLP under the Limited Liability Partnership Act 2008. These legal structures ensure that the organization is recognized and governed under established Indian laws. To qualify as a startup, the entity must be relatively new in its business journey. Its period of existence and operations must not exceed 10 years from the date of incorporation or registration. Additionally, the enterprise should maintain an annual turnover below 100 crores in all financial years since its inception, ensuring that the startup category supports small and emerging ventures. A valid startup should be working towards innovation, development, or improvement of products, processes, or services. It may also be recognized as a startup if it has a scalable business model with high potential to create wealth and generate significant employment. This requirement highlights the emphasis on creativity, growth potential, and societal impact. Furthermore, the entity must not be formed through the splitting up or reconstruction of an already existing business. This condition ensures that the startup benefits and recognitions are reserved for genuinely original and new business initiatives rather than restructured or divided older companies. An entity will cease to be recognized as a startup if its turnover exceeds 100 crores rupees 100 crores in any previous financial year or once it completes 10 years from the date of incorporation or registration. After this point, it transitions out of the startup category, even though it may continue to grow and operate successfully. Purpose: to provide finance for activities aimed at innovation, development, or enhancement of products, processes, or services, ensuring that business can continuously improve and stay competitive in the market. This also includes supporting enterprises that have a scalable business model capable of expanding rapidly and efficiently with the potential to generate substantial wealth creation and employment opportunities. The goal is to encourage forward thinking ideas, promote technological advancement, and contribute to overall economic growth by empowering businesses that demonstrate strong future potential. Objective: funding support is provided to eligible startups that have been officially recognized by the Department of for Promotion of Industry and Internal Trade, enabling them to access crucial financial assistance during their early and growth stages. Such recognition ensures that only genuine, innovative, and growth oriented enterprises receive support, helping them overcome initial financial constraints, scale their operations, and strengthen their technological or business capabilities. This funding aims to encourage entrepreneurship, promoting innovation driven ventures, and contribute to economic development by enabling promising startups to transform their ideas into successful and sustainable businesses. Nature of facility. A fund based or non fund based limit may be extended to eligible borrowers depending on their financial requirements and business operations, ensuring adequate support for both working capital and non cash facilities. At the time of the initial sanction, a composite loan can be considered combining multiple credit needs under a single structured facility for greater convenience and flexibility. The repayment structure may be customized based on the borrower's cash flow, allowing the loan to be serviced either through EMI based monthly installments or non EMI repayment options depending on the nature of the business, project cycle, and financial stability. This approach ensures tailored financial assistance that aligns with the borrower's operational needs and growth plans. Quantum of loan. The minimum loan amount offered under this facility is above rupees 10 lakhs, ensuring that the adequate financial support is available for businesses requiring substantial funding to initiate or expand their operations. The maximum loan amount is determined based on a thorough financial assessment, which includes evaluating the borrower's business requirements, projected cash flows, repayment capacity, and overall viability of the project. This flexible approach allows the sanction limit to be aligned precisely with the borrower's genuine needs, ensuring optimal financial assistance without overburdening the enterprise. Security. Primary. Under the security arrangement, the primary security for the loan comprises all assets that are created using the bank's financial assistance, and these assets must be duly charged in favor of the bank. This means that any machinery, equipment, infrastructure, or other assets purchased or developed through the sanctioned funds will serve as collateral, legally securing the bank's interest until the loan is fully repaid. Such a structure ensures that the financed assets themselves act as a safeguard for the bank while simultaneously supporting the borrower's business growth through productive asset creation. Collateral. A. For collateral requirements, the facility sanctioned up to rupees 10 crore may be extended without the need for traditional security, as it can be covered under the credit guarantee scheme for startups. This government-backed guarantee scheme provides risk coverage to the bank, allowing eligible startups to access financial assistance even in the absence of tangible collateral. By leveraging CGSS, startups can obtain necessary funding based on the strength of their business model, innovation potential, and projected growth, thereby promoting entrepreneurship and reducing the burden of providing physical security. B. For collateral requirements, the facility may be structured with a combination of partial coverage under the credit guarantee scheme for startups, along with additional collateral security provided by the borrower. This hybrid approach ensures that a portion of the credit risk is mitigated through the government-backed guarantee, while the remaining portion is secured through tangible or acceptable collateral offered by the borrower. Such an arrangement enhances the bank's confidence in extending larger or higher risk facilities while still offering startups the flexibility and support needed to access funding based on their business potential and available security. C. For collateral requirements, the facility may be secured solely through collateral security provided by the borrower, ensuring that the bank's interest is adequately protected. In such cases, the collateral coverage ratio must be 0.60 or above, meaning the value of the collateral should be at least 60% of the loan amount sanctioned. This requirement helps maintain a balanced risk profile for the bank while allowing a balanced businesses with sufficient tangible security to obtain the necessary funding. By relying entirely on collateral security, the facility offers a straightforward and transparent structure that aligns the borrower's asset strength with the bank's credit exposure. The fees associated with the guarantee cover under the credit guarantee scheme for startups will be fully borne by the borrower, ensuring that the cost of availing government-backed risk protection is transparently allocated. This means that any guarantee charges, annual fees, or related expenses required to secure coverage under the scheme must be paid directly by the startup seeking the facility. While this adds as the financial responsibility for the borrower, it also enables them to access collateral fee or partially secured credit through the support of CGSS, thereby enhancing their ability to obtain funding based on business merit rather than just physical security. Guarantee. A personal guarantee from the promoters, directors, partners of the firm, major shareholders, or other approved guarantors may be obtained to strengthen the security structure of the facility. This personal commitment assures the bank of the borrower's accountability and reinforces the seriousness and financial responsibility of key individuals associated with the enterprise. Such guarantees may help mitigate credit risk and demonstrate the promoter's confidence in the business, thereby supporting the overall credit worthiness of the proposal. Eligibility. To be eligible for support under the scheme, the entity must be formally recognized as a startup by the Department of Promotion of Industry and International Trade in accordance with the Gazette notification issued by the Ministry. This recognition confirms that the enterprise meets the government's defined criteria for innovation, scalability, and growth potential. The authenticity of the DPIIT certificate can be easily verified through their official online verification portal, ensuring transparency and legitimacy in the qualification process. This mandatory recognition helps ensure that only genuine startups benefit from the scheme's financial and developmental support mechanisms. DPIIT certificate can be verified from their website, which is https://www.startupindia.government.in/blockchain verify/verify.html. Margin. The minimum margin requirement varies depending on the nature of the facility and ensures that the borrower contributes a portion of the project or working capital need from their own resources. For fund-based facilities, the margin for term loans is set at 25%, ensuring sufficient borrower stake in asset creation. For working capital, margins are fixed at 10% for stock and 25% for receivables, ensuring adequate liquidity and buffer. For non-fund based facilities such as letters of credit and bank guarantees (BG), a margin of 15% is required. These structured margins help maintain a financial discipline while balancing risk between the bank and the borrower. Validity. The validity of startup status is subject to specific criteria, and an entity will automatically cease to be considered a startup once it crosses certain thresholds defined by the government. A business will no longer qualify as a startup if it has completed 10 years from the date of its incorporation or registration, regardless of its stage or growth or operations. Additionally, if at any point in the entity's annual turnover exceeds rupees 10 100 crores, it will lose its startup recognition as it would have moved beyond the scale and scope intended for early stage entrepreneurial ventures. These limits ensure that the benefits and support under the startup framework are reserved for genuinely emerging businesses in their formative and growth focused years. Rate of interest. The facility carries a concessional rate of interest offering a 1% reduction in the applicable lending rate as an incentive for eligible startups. However, even after availing this concession, the final rate of interest shall not fall below the bank's repo based lending rate, ensuring compliance with regulatory guidelines and maintaining minimum pricing standards. This interest concession helps ease the financial burden on startups while supporting their growth during the crucial early stages of development. Processing charges. All processing charges for the loan facility are waived for eligible startups. This provides financial relief to new enterprises by reducing upfront costs associated with loan processing and encourages startups to avail of banking support without an additional financial burden at the time of sanction. Repayment. For the loan facility, the working capital component is repayable on demand, providing the bank flexibility to call for repayment as needed while supporting the startup's short-term operational requirements. In the case of a term loan, the maximum door-to-door repayment period is 120 months, which includes a moratorium period of up to 24 months. The moratorium period allows the startup a temporary relief from principal repayment at the initial stage, giving it sufficient time to stabilize operations, generate revenue, and build cash flow before beginning full repayment. This repayment structure is designed to align with the startup's growth cycle while ensuring a manageable and structured approach to servicing the debt. Treatment of seed capital. Any seed capital or venture capital investment provided by the venture capitalists or angel funds shall be treated as margin or equity while calculating the debt to equity ratio for the startup. This means that investments made by external investors in the early stages of the business are considered part of the startup's own capital contribution, reducing the proportion of debt in the overall capital structure. Recognizing seed capital as equity strengthens the startup's financial position, improves its creditworthiness, and enables it to access additional funding from banks under more favorable terms, while accurately reflecting the risk sharing between investors and lenders. Note: for more information, for further details regarding the startup financing scheme and related support, interested individuals or businesses can send an SMS with the word SME to 7669021 Alternatively, they can give a missed call to 8010968334 to receive prompt information and assistance. This provides a simple and convenient way for startups and entrepreneurs to access guidance, clarify queries, and initiate the process of availing financial support without the need for lengthy procedures or formal applications. Startup Branch Contact Officer. Request: check our website https://bankofindia.co.in/financing new business slash stars hyphen start hyphen up hyphen scheme. Conclusion: startup financing schemes are designed to empower young and innovative enterprises by providing the financial support, security, and flexibility needed to transform ideas into successful businesses. With access to structured loan, government backed guarantees, and favorable terms, startups can focus on growth, innovative, and wealth creation while managing risks effectively. By leveraging these opportunities, and entrepreneurs can scale their operations, generate employment, and contribute meaningfully to the economy, ensuring that their ventures thrive in a competitive and dynamic business environment. Disclaimer: the information provided in this document is for general guidance and informational purposes only. Eligibility terms, conditions, and sanction of loans or financial assistance are subject to the bank's internal policies, regulatory approvals, and prevailing government guidelines. The bank reserves the right to modify, amend, or withdraw any of the features, rates, limits, or provisions mentioned herein without prior notice. Inclusion in this document does not constitute an offer, guarantee, or commitment to provide funding. Prospective applicants are advised to contact the bank directly for detailed and updated information before applying. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.